Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. As we always say, the charts do tell the truth. Well, here we are again on this Friday, March 7th, 2008, and I can honestly say this was one of the wilder days I've seen. The moves in this market were out of this world. And when I say that, I just, you look at the market, how it ended today, and you say, okay, it was a little bit of a down day. Those of you guys that went to work maybe looking at the closing bell here and say, okay, it was a down day. Dow was down 147. The Nasdaq was down about 8 points. The S&P down almost 11 points. Basically, the Dow was the lagger today, here down about 1.2%, while the Nasdaq was the biggest winner, if you could say a winner, even though it was down 3.36%. But the idea here, the intraday moves are just out of this world, and I want to go right into this here because it is truly amazing when you look at the moves in this market and understand the volatility that there was today. All right, we all went in today thinking, well, we did break February lows yesterday. Maybe we're going to see January lows. The Nasdaq was almost there, so you were like, okay, well, here we go. We'll probably see that. But to see these moves intraday were just out of this world. So let's go right into the ES here on the intraday chart. And what you can see here is look at the volatility in these moves. I mean, there's no joking here. This was unbelievable. There was just, and it wasn't even that we actually had any announcements on TV or anything like that. Initially, what we did have, folks, was some pre-market activity. And I want to start out by going over what happened intraday in the early morning hours. So I'm watching the market at about 7:30 a.m. this morning. And I'm going to give you this brief story because those of you interested in the market intraday moves will appreciate this. And all of a sudden, I'm seeing the futures start to move up. And here you see that. And, well, what's going on? Well, Minionville, which is a blog online, it actually came out and said they're expecting a rate cut, or they thought there may be a rate cut after the jobs number at 8:30. Well, the market started to rally on that, and don't ask me how Minionville got so much, reputation for calling something like that. But in any case, they were wrong in the scheme of things, but they were right in some sense. And number one, so we got this big move here, all right? Then all of a sudden, come a little before 8:30, the Fed actually came out and did do something, but they didn't do the rate cut like Minionville was expecting. In fact, the Fed came out and added liquidity to the market by doing these short-term loans. I think it was $100 billion in short-term loans or some large amount like that. And the market initially spiked up because everyone thought when they heard something was coming out from the Fed that it was a rate cut. And even so, they even thought, well, the Fed is acting here. This is a bullish thing. But then people began to, and you see the spike up, by the way, right into this 200 intraday moving average. But then people started to say, again, they look at it from the contrarian view. Well, the jobs number is coming out in about 5-10 minutes. And if the Fed is acting this quickly, this jobs number must be ugly. And all of a sudden you got a sell-off. So we started to sell. We started to sell. And then the jobs number comes out at 8:30, right? And right before that jobs number, the media on CNBC especially noted, starts talking about how, well, maybe they're just doing this infusion of liquidity here because, they realize they have to be proactive and the jobs number is not going to be that bad. And you actually saw the market, the futures go from being positive here and really positive here to now a negative move all the way down to minus 12 on the jobs number. Right before the jobs number, you got to push back to almost flat and then another thrust down on that jobs number as it was ugly. Ugly, all right, as they say on Fast Money, got hit by the ugly stick. All right, so we saw this huge sell-off here. Look at this sell-off here. But from this high to this low, guys, I mean, this is a big move. You're talking about basically from 1318.5, the high of the day, all the way down to around, probably looks about 1287. So you're talking about a huge move there, 30 points on the futures even. So in any case, what we did see there was an initial pop and a little bit of a W pattern formation. So here you can see the little bit of a W, very small one. You don't really put a lot of power into that, but you do see the little pullback right there of the V pattern right into the double moving average, and then the pop. Then you see the second touch of that 200, which again is a sell signal, and we start to sell. Small rally here, a hard sell the rest of the afternoon, and then out of nowhere, and it's so funny because come about 2:55, I happened to mention in the intraday E-mini and day trading stock chat that we run, I said, well, be careful here, guys, because at 3 o'clock there may be some buying. Who knows if Gasparino is going to come on CNBC or if there's going to be an announcement at 3 or 3:30, because it seems like every day now there's some announcement at 3 or 3:30. And sure enough, at 2:58, the market starts to jump, and at 3 o'clock, boom! This immense rally takes place that just shoots the market up astronomically. I mean, this type of rally, again, considering we were selling for this long, I mean, you're talking about 3 or 4 hours, now about 3 hours of selling here, from about 11 o'clock here to, now 3, so yeah, till 3 o'clock in the afternoon, Eastern time, so that's about 4 hours, hard selling. And all of a sudden, you see this massive rally. Then we basically top out right here on the moving average and sell into the close a little bit to close here. But nonetheless, the Nasdaq was down 30 plus points and only closed down 8. So again, an impressive stand. And now what I want to show you is, let's go to the daily. Enough about this. And I have the weekly up, but I want to switch off that weekly so we can actually get into the daily first. Daily's more important to me right now. Now, again, yesterday we talked about that February low being taken out. And we can draw the line right there. You see we got a close below. We did get confirmation today, but we did definitely rally off the lows. Either way, you have to figure we will probably test those January lows at some point. Now, I'm not in the shorting camp, and I've said this on yesterday's video, and I'm glad I said it, because if you were short in today's market or long in today's market, you probably got whipsawed unless you just went away from the computer all day. All right, and the reason why I say that is because just in the early morning moves like this, unbelievable moves. And then the late day move. Ultimately, we ended down, absolutely, but this was just wild. I mean, I have not seen volatility like this since those January days right here where we were moving like that. All right, and you can see the volatility in those days. Very volatile day, but we did confirm to the downside today. It makes me think that they probably will attempt to touch those lows, but again, as I say, I just can't go short. And I'll be honest with you guys. You know, many of you guys will say, well, we confirmed it. Well, why wouldn't you go short? Because there's too much government intervention. All right, it's kind of like, I'm trying to think of a good analogy. It's very tough to think of a good analogy here, but in any way, shape, or form, when there's always the threat lurking of a rate cut or a government bailout or an announcement of this or that, to go short is just almost, you know, you're talking about a move already in this market from here to here. That's a huge move, and now you're telling me to go short for this little pop? What if the Fed comes out and cuts by 50 basis points on Monday morning and I'm stuck short over the weekend? What do? I get crushed. So no, I will not step up here. Let the market come down to this double bottom. I'll be ready to play it for a bounce, a near-term bounce at the double bottom here at January. That's really what you got to look for. And again, you guys know I'm a cautious trader, and the reason I'm a cautious trader is because this market's not for kids, all right? This market is a dangerous market. Those of you that have traded for a while know that. Those of you that are new maybe don't know that, but you'll probably learn that, unfortunately. So you have to be very cautious, and you want to only put the highest percentage trades in your favor. All right, those are the ones you want to take. For instance, if I don't think I have an 85% chance or better at winning at a trade, and that's phenomenal odds by the way, 85% or better, I don't step up and take that trade. Absolutely no. Will not do it. Will not in any way. So meaning that yeah, it looks like we're close to the bottom, but look at the downside. So I have a little bit of a downside here, right? So you take in this little bit, but then compare it to the chances, which I do think, by the way, there's a fair chance of a Fed rate cut or some sort of announcement early next week. You got to say, hey, listen, man, you know, maybe there's a 70% chance we do test that low, maybe even more, maybe 75, close to 80, but it's just not quite enough, because the upside, even though I could gain this little bit of downside here, from here to here, the upside move on a 50 basis point emergency rate cut or a bailout, no less, could be astronomical. I could get, you know, if we gap up on a bailout on, you know, on any of these days, it could be a huge gap up. So you just can't do it. That's my point. Long story short. I don't mean to ramble on like that. But let's take a look at the Nasdaq. Now the Nasdaq was very, very interesting for a couple reasons, guys. And I'm going to show you here. Looking at the Nasdaq, there's February lows. All right. And one thing I do want to point out here, and I want to just get my charts in correct portion here. There's February's low, right? And then where do we have? We had January's low, which was interesting. Now, this is where I really want to focus on today because, in my opinion, they saved this market. The Nasdaq was saved today. So let me bring out my trend tool again to draw the trend. Now, the low here on the Nasdaq was 2202. All right? So let's draw that low on the Nasdaq. Now, a close below this low would be a technical breakdown on the Nasdaq below January lows. And intraday, we traded as low as 2186. So we were about 15 points below the January lows on the Nasdaq. But that buy program that came in, and look at the buy program on the Nasdaq. This is a huge buy program right here. All right, this is the intraday, by the way, I'm showing you now. The intraday buy program that basically saved the market from closing below January's low, and we saved it, and now we move back above. So near term, I almost favor the Nasdaq for a little bit of a bounce now. All right. Now, again, the SPY may need to test those lows. It's very possible from January. The Nasdaq has already tested those lows, and they did not close it below. So, in a technical sense, I do happen to feel that the Nasdaq may be setting up for a small bounce. That also makes me cautious as I talked about shorting the SPY or the E-minis, because if the Nasdaq's setting up for a bounce or maybe a near-term support area, who knows how much lower the ES is going or the SPY. Yes, it may go all the way back down here on the SPY. It may also not. It may hold with the Nasdaq here. So again, it's all about watching what you're doing here and being safe. So again, you can see, folks, possibly, honestly, you almost have an M pattern forming here. I'm not going to go out on a limb and say it is yet because we need to see more of it, but there's a lot of patterns out there. There's a lot of research that my partners and I have to do at InTheMoneyStocks.com this weekend because everything is changing now. All right, we obviously broke down this week. Now we're testing those January lows. We're getting close to it, and we're going to have to see. So stay tuned. Come to the Sunday night chat. It's free. You can find it on our website. Come join the intraday E-mini stock chat. You can find it under the stock chat on the room. Come join us at Swing Trade Alerts. Have a wonderful day.